Business loans. Borrowing money from banks or financial institutions. There are several types of loans. There is a term loan, there is the line of credit. The thing about borrowing money from banks is that you must be credit worthy. You must be attractive to be lended to. The banks, I have said this several times, the banks do not give you a loan because you bank with them. The banks will not give you a loan because you save money with them. Banks give you loan largely because of the activities that happen in and out of your account. It is not how much money you are saving with the bank that makes them give you loan. When they look at your account activity, they want to see how money comes in, how money goes out, cumulatively what is the total value of this account. That is what prompts the bank to reach out to you to say you have qualified for X loan, you have qualified for Y loan. Or they reach out to you to say, we offer this kind of services. Do you need a loan? From the story of your account, a risk and credit officer or analyst can tell whether you're a small business, medium, or large. They can tell. And when they reach out to you, they'll be offering you their different SME packages. It is not because you are saving money with them. In fact, saving money, not spending it, saving it as a business is a red flag. Because it means that you don't have what to do with it. So if the bank give you their own money, you also will not know what to do with it. Dangote is the richest man in Africa. Does not literally mean that he has stacks of money sitting in a bank. That's not what it means. If you even hold that man now and shake him, 1 naira will not fall off. It's not like he moves around with cash or he has money stacked in the bank. But his worth in transactions, in assets, that's what they're counting. So borrowing from banks gives you access to significant capital. As much as you are qualified to take, the banks will give if you meet the requirements. The bank does not want to own any form of share or equity from your business. They don't care. Theirs is, we give you X, at the end of the duration, we give us Y, period. We don't want to be part of your business, we don't want to own your business. One of the advantages of bank loans is that there is a predictable repayment pattern. So you know, in fact, they do the calculation before they give you the money. So they are saying, you want 5 million, yes. Can you pay back 5 million in 12 months? You say yes. It's okay. Based on your current transaction level, if we give you 5 million, it means that monthly you'll be paying us X. If we times X by 12 months, you probably will end up paying us, for example, let's say 7 million. We give you 5 million, you pay back 7 million. If you divide 7 million by 12 months, you'll be paying us approximately X every month. So can your current operation produce in excess of this amount that when we take X out of it, you will still be doing business? If the answer is no, then, but I know some of you have faith, so you say, don't worry, just give me. I'll be surprised you. Just give me. See, my Lord has spoken, just give me. You will see what I will do. And then when they give it to you 3 months after, your number is no longer reachable. There is a problem. Next thing, you're in the bank telling them we need extension. Something happened in our home. I had to travel to the village. You see that money you gave me, I've never started the business. Something happened, I had to rush to the village. It does not concern the bank. Which is why I always tell you, why bootstrapping is good, family and friends is good, these ones they can understand. But you see bank loans, it is an institution, they are structured in a way that they don't take excuses. The day you draw, it is okay to take a bank loan if you want to expand a business that you have already tested or that you're already doing. You see that there is prospect for the business to expand. For example, you have a POS stand at the junction. As early as, say, 3, 4 in the day, you're out of cash. From conversations, you have seen that some of your customers are coming from this other side of the road up to the junction to make a withdrawal. You can expand by having another point at this other junction. So you reduce the traffic from this way and increase traffic from this other side. So the money for these people can last up to 5 p.m., for example, that's your closing time. And then you have another group here that can now deal with your till 5 p.m. Gradually, you can expand as you see the traffic. Now you're saying, okay, I have 2 POS stands. This is what I make daily. And this is when I close. I close because I do not have enough cash. If I borrow, I can have 2 POS stands in the next streets, away from my street, one at each extreme. And somebody says, are you sure? Yes. Why do you think this will work? Because you're really doing it here, you have records to show. All the mistakes you need to make, you have done them here. So at the point where you now need to get someone else's money to drive this process, you are not going to make as much mistakes as you would have made from the beginning. Do you understand it? Okay. Avoid bank loan. That's usually my personal advice. You want to start, avoid bank loan. You lose weight. You have BB. Nobody's chasing you when you start praying those kind of prayers. Leave village people, they didn't do anything to you. Bank loan is not the way to start a business. Sometimes you're still innovating the shop, but the bank loan is ready. The bankers are even coming there to greet you. I don't know, how's the work going? Well done. So when you start now, it does not mean that the loan is not ready. The loan is ready, but they are coming to greet you. And then as soon as you start, they are there. As you sell, at the end of every day, as you sell, they are there. Give us money. As you sell, they are taking. They are not interested, they are not largely interested in whether your business will grow or not. That's not their business. Their business is they gave you money, they will get money back. That's it. Let me talk about 2 challenges of bank loan. You must require creditworthiness and collateral. Most times, people do not have the collateral to take the bank loan, and they are not creditworthy. To be creditworthy does not mean that you're saving money with the bank. No. To be creditworthy means that your business has a structure. Your business has an accounting structure. You have a bookkeeping history. Some of us may not be operating a proper banking system for our small business, but if we have a bookkeeping system, you can take that book to the bank and say, this is my record. And they look at it. If they analyze it and it's correct, it can give you a credit-worthy status. Disadvantage of loans, bank loans, business loans actually, is the interest payment adds to your business costs. Somebody gives you a loan. The idea was to grow your business. But by the time you finish paying the loan, it seems like your business is trying to start again. Seems like you're trying to start again. Everything you were selling on behalf of the bank that borrowed you money.